Where prime, if it's even, it's at 2.4, 2.5, 2.6%, which isn't that much lower than a fixed rate. What if the rate goes up a bit? Can I then, or could I lock it into a new variable rate mortgage?
Yeah, good question. So if you're with your existing, like you want to stay with the same lender, generally speaking, if you want to move from a prime, let's just say we see prime minus ones come back again, then typically speaking, you'd pay a 3-month interest penalty with your lender and be able to move into the prime minus one is typically how it works. Now, some lenders don't allow that. So in those cases, you have to what's called transfer your mortgage or move your mortgage from lender A to lender B to gain an advantage of a much lower rate. But you know, if you're talking 1%, if we did see a 1% slide, 3 months interest is eaten up very, very quickly. So in a case like that, you'd definitely be benefiting from making that change.
Perfect. Those have to be some tough conversations you have to have with your clients to educate them, because breaking a mortgage is all we think about is the money we're losing, not how much we're saving.
Well, yeah, but and the other piece too is what we found is, you know, no one ever thinks anything is going to change in the next 5 years of their life in most cases. Now, if you're I'd say a mover and a shaker in the investment world, or work in a career that is commission based and you enjoy moving and have the opportunity to move quite a bit, may be a different scenario, potentially like your scenario, Jared. But on the other side, you know, the reality is the pros and cons of a fixed versus variable, particularly as you get into cancellation penalties or midterm liquidation penalties, can be quite substantial. So historically speaking, if we go super historical, variable has outperformed fixed rate mortgages just in history, and it's over 90% of the time. It's only been about 10% of the time that a fixed rate has actually made sense to make to take. But you know, the other true reality is you have to take into consideration that penalty, and a penalty with a fixed rate is in most cases higher than a variable.